Hello and welcome to this full update on the Portugal Golden Visa. Today we're going to focus on two things: an update on the immigration law in Portugal and the latest projects that our clients are investing in with us to obtain their Portugal Golden Visas. First, a quick 30 seconds for those who've not watched my other videos. I run the Americas business at Holborn Assets. I've lived and worked in the US several times. My wife's American, and we ourselves moved from the US to Portugal 4 years ago. Holborn is a global financial services business. We look after several $1 billion of client money. We have about 20,000 clients and offices all around the world. We're also the largest player in the Portugal Golden Visa market. I have a whole separate video that goes into this in more detail and why we are the right company to work with. There'll be a link to this in the description below. With that out of the way, let's start with an update on the Portugal Golden Visa program, as it's been a busy few months, although we've actually ended up in the same place we started. The new centre-right government in Portugal, the third government in as many years, introduced a bill to Parliament to make several changes to the immigration law. They then tried to rush this bill through and into law before the summer break. The government said the changes were not aimed at the Golden Visa, but at other visa categories that were, in their opinion, being abused. But the law was poorly drafted, and there would have been some impact on Golden Visa applicants. However, there were several other controversial elements to the bill, so the President of Portugal referred this law to the country's constitutional court, and they ruled that 5 of the 7 proposals in the bill were indeed unconstitutional, and so the President vetoed the bill, stopping it dead in its tracks. Interesting, one of the 2 areas that the court was okay with was the part that said that the Golden Visa could be treated separately from changes made to other visa categories. The government may have another go at immigration reform, but now they'll have to take more time and frankly write a better bill if they want to get anything done. If and when they might try to do this is currently unknown. So the net effect from all of this is there's no change, but it is yet again another sign of the direction of travel with Golden Visa programs. Prices go up and investment choices become more limited. The terms are not going to get any better than they are now. So apply now and make sure you secure the current deal. Right, onto the investment projects. As I mentioned, Holborn is the biggest player in the Portugal Golden Visa space and has access to every project offered in Portugal. It is, however, impractical to go through all of them on a YouTube video. And more importantly, some projects are just better than others. Or to put it another way, some projects are tailored better to what 99% of clients are looking for from their Golden Visa investment. So that's what I'm going to focus on today. The 2 most popular options that my clients are using right now for their Golden Visa applications. The first is using the route for €500,000 invested in private Portuguese companies that either create or maintain a certain number of jobs. I've done other videos on the Solacqua project in the Algarve where I live. Although all the studio units are now sold out, there are 1-bed units still available. So as a quick recap, clients invest in the Navigator company. It manages and operates a portfolio of 9 hotels in Portugal, all owned by its parent company. All the hotels are ready built and operational, so no developer risk, unlike a lot of other seemingly similar projects. This particular hotel is smack in the middle of Albufeira, the main tourist town in southern Portugal. When clients invest the €500,000 in the Navigator company, they immediately receive back €101,000 in upfront income. This means clients really only need to have €399,000 of capital available for the investment. Clients keep that €101,000 of income and it becomes their gross profit. There is also the option to borrow an extra €50,000 from the developer to get the capital required down even further from €399,000 to €349,000, but more on that in the next slide. At the end of year 6, clients have the option to have their shares bought back for €500,000, so they put in net €399,000 at the start and they get €500,000 back at the end, hence a known profit of €101,000. Clients can also opt to instead take ownership of a one-bedroom unit at the hotel. As the one-bedroom units are valued at €550,000, if someone opts to do this, they will have to make an additional payment of €50,000 at the end of year 6, should they want to buy the unit. This slide clarifies the options. Put in $399,000 and the other $101,000 comes from the upfront income paid to the client. When they reach the exit date, the client decides whether they want to cancel their shares and receive €500,000 back in cash, or add $50,000 more and take ownership of a one-bedroom unit in the hotel. They can sell it on the open market or keep it and enjoy the yield from having it rented out by the operating company. Option 2 is as above, but the client additionally borrows $50,000 from Navigator, reducing the capital the client needs now to €349,000. The loan does have a 5% interest rate and is repayable over 2 years. Everything else remains the same. This is certainly the best deal of its type on the market and available exclusively to Holborn, as we were able to effectively underwrite the entire project due to the volume of client applications that we handle. We have around 8 to 10 other investment projects that we offer, but in this category of investment, none offer the same known investment return paid up front, nor have the same business model of existing operational hotels, and none offer the same high quality collateral securing the investment made. So although if anyone is interested, I can give more details of those projects on a private call with me, I'm not going to spend time going through them on this video today. Now, that's not to say every client goes down this route. For some, it's preferable to use the venture capital fund route to invest €500,000 in a more traditional fixed income, stock, private equity, or even Bitcoin fund. SEC rules prevent me from going into detail about individual funds on a mass communication channel like YouTube, so I'm going to make some general observations about the range of 50 or so funds available for Golden Visa investors. There are 2 key rules that all funds must adhere to. I'll mention them now and the reason will soon become clear. Firstly, 60% of the invested money, so $300,000 out of the $500,000 required, has to be invested in Portuguese securities, stocks, bonds and so on. Secondly, the invested money needs to stay in that fund for at least 5 years, and most funds are set up with an 8 to 10 year holding period. Investors cannot change funds partway through the process, so they need to pick wisely. I have spent the last 17 years as either CEO or senior manager of investment advisory firms. In my opinion, the available fund options break down into 3 groups: too simple, too illiquid, and Goldilocks. Let's start with too simple. There are lowish fee funds out there that track the Portuguese stock market. Well, let me give you a few facts about the Portuguese stock market. There are only 53 listed companies in the whole market, and just 4 companies make up 60% of that entire value. And the entire value of the Portuguese stock market today is only $91 billion. And putting that in context, if the entire Portuguese stock market was a single stock in the US, it would rank number 121 in size, just below DoorDash, and about the same as CrowdStrike and Marsh McLennan. The biggest 4 stocks in the US today are Nvidia, Microsoft, Apple, and Google. Just those 4 stocks together are 160 times bigger than all of the Portuguese stock market combined. Here's another one. The most valuable company on the Portuguese Stock Exchange is EDP, a utility company. But even that is about 1/3 too small to even be eligible to be considered for the S&P 500, the top 500 stocks in the US. So investing in a fund that just follows the Portuguese stock market is investing in generally small cap stocks in a tiny economy where, if you remember, you're locked into that fund for at least 5 years. It's not what I would do with my money. Next is too illiquid. Let me start by explaining what I mean by illiquid. The ease at which an asset can be bought or sold is referred to as its liquidity. A popular stock like Microsoft or a commodity like gold or oil are highly liquid. Lots of buyers and sellers, excellent price transparency, and millions of units traded every day. On the other hand, farmland in the interior of Portugal is unsurprisingly not in that category. There are many Golden Visa funds that offer attractive returns from investing in the shares of companies involved in quite esoteric or unusual assets like farmland. In order to return investors' money when they want to exit, the fund will first need to find someone to come in and buy those assets from the fund. As I mentioned a few minutes ago, Portugal is a small capital market. At the moment, there are billions of dollars coming in from abroad for Golden Visa investments. But as I also mentioned earlier, no one knows how long the program will be available for and what categories will be available. And when the money stops, I would be concerned about where the investment funds are going to get the money from to enable them to exit their equity positions in these assets in order to return the investors' money. So we come to Goldilocks. Good news. There are a small number of funds that our clients have selected because they found they offer a great balance of diversification, perhaps with a healthy dividend yield of up to 8% per annum, asset-backed lending in areas subsidised by the EU, or listed on major stock exchanges so there is liquidity should it be needed. I have some clients that are extremely sophisticated investors. Some are actually investment advisors themselves. They've selected these funds and are very happy with the decision. So there are good funds out there if you know where to look. Whether they're better for you than the Solacqua investment is then a question of priorities. Solacqua requires less capital up front, as low as 349,000 instead of 500,000 euros. It's also got an individual hotel unit listed as collateral against your investment. And the investment return is not only known at the outset, it's also paid up front. But using the investment funds can be more familiar for some people. There's the potential for a higher percentage return. It can be a more diversified investment and, in some cases, pay nice annual dividends. So they can be worth considering if you have that extra capital available. I hope you enjoyed this update on the status of the Portugal Golden Visa program and the projects clients are investing in right now. If you'd like to have a call with me to go through your situation in detail and work out the best solution for you, please send me an email, like and subscribe for more Portugal Golden Visa content, and if you can, please take a few minutes to watch some of the other videos on this channel where I give some more background on why Holborn and I are great people to work with, and more information and background on the Portugal Golden Visa program. Thanks for watching. Until the next time.